Good morning, dear friends. My name is Clive Thompson. I'm here with today's stock market report and a summary of what's been going on in the last few days in the world of finance. And if you stay tuned, I will tell you about a money laundering case that I got involved with years ago in my career and what happened. Today is Tuesday, November 25th, 2025. Black Friday is coming on Friday the 28th in 3 days' time. Many retailers and online websites are jumping the gun and offering major discounts already. But keep your eye on Friday for the best bargains. And while I'm on the subject of Black Friday discounts, I encourage everyone to look at my video, which is shown in the link underneath this video. The video I'd like you to look at is called How to Build a Benchmark Beating Portfolio for 2026. That video teaches anyone, even complete beginners, about the various features which can make a stock attractive. It shows you a quick and easy way to find the stocks with those attractive features. So you can build a portfolio without too much time or effort. And that would be a portfolio of stocks of with very attractive features. So to do everything that I do in that video, you only need to use a program, or rather it's a website, which is called Simply Wall Street. Street is spelled .st at the end of the domain name. So the domain is simplywall.st. Now that's a completely free website with no credit card required. And you'll be able to follow along as I choose the stocks. I show you the methodology with the free version. You'll see how the stocks are picked. You'll be able to pick your own stocks, and you'll be able to see which stocks I actually picked myself. So where does the Black Friday bit come in? Well, the free version of Simply Wall Street Simply Wall Street is limited to only one portfolio. You can't have multiple portfolios with the free version, and that one portfolio is limited to just 10 stocks. Of course, you can look at as many stocks as you like, but you're limited to one portfolio if you want to save those stocks in a portfolio. I personally prefer the unlimited version of Simply Wall Street, and I've been using the unlimited version for at least 4 years, maybe more. That costs a little bit more, but with the Black Friday discount, which you'll find underneath my video, there's a link to the program Simply Wall Street. You can sign up for the free version, and if you then convert from the free version to the paid version during the Black Friday week, you'll be able to get a discount with at least 50% off. That's a special deal for my viewers, and the result is that will only cost you a few pennies a day, less than buying one Starbucks coffee every week, even less than that probably. So really, really cheap to get the unlimited version where you can do everything if you want to. And it's not obligatory because you can do everything for free if you want as well with what I show in that video. And that video will help you quickly build a portfolio to beat the benchmarks. Not guaranteed. There's nothing guaranteed in life. This is not investment advice, but I've been doing it for years and I do it very well because of Simply Wall Street. So let's talk about the news this week and last week. So the major headline in the last 7 days was Nvidia'as earnings release. Now, Nvidia is the world's largest publicly traded company by market capitalization. So inevitably, its results attract intense attention. The whole future of the stock market depends on Nvidia. I mean, it's so large, it's a huge chunk of the S&P 500, which is a huge chunk of the world's stock markets. So what Nvidia does, more or less, is what the world's stock markets are going to do. So the figures were strong across the board. Revenue, profits, forward guidance, they all exceeded the consensus expectations of analysts. However, despite the positive numbers, the share price reacted negatively. And we'll have a look at that now. Here's Nvidia Corp. I brought it up on the screen. After reaching a high of around $198 up here, the stock literally plunged down there, like that. It plunged to $174. Now, you may not say that's a lot, but it is a lot for a stock. It's 10%, roughly. And then it recovered to where we are now. We're now at $182.55, and actually still looking fairly weak. Now, why did Nvidia's share price go down so sharply after such good results? Well, some market commentators noted that Nvidia's inventory levels, that's the amount of unsold stock they've got, and their accounts receivable, that's how many people haven't paid the bill yet or how long it's taking to pay the bills, had increased compared with previous periods. Now, there's many possible explanations for that, including normal operational timing or expansion-related factors, but those unusual increases in inventory and unusual increases in the time people taking to pay them prompted some debate about how to interpret them. And there's obviously divided views and no clear consensus, but the question is everything as rosy as Nvidia is really making out? And at the same time, not helping Nvidia or the AI sector in general is a broader debate about artificial intelligence and the investing which is going on in terms of the strategic partnerships which are being made between various companies involved in the AI space. So in some cases, companies are both investing in one another, and they're agreeing to use each other's technology, products, or cloud computing services. So such arrangements are actually common in high-growth sectors, but they raise a question as to what extent is the underlying demand really there for the products. I mean, one way of discussing it is to call it something like vendor financing. So basically, when a vendor pays money or lends money or gives money to one of its customers who's buying their product and says, we're giving you a bunch of money on condition that you buy our product, well, that's called vendor financing. Now, that's all great and hunky-dory, provided that the vendor is actually making a profit when it sells those goods. Otherwise, it's kind of creating a profit for the first vendor, the company which supplies the money, the product supplier, creates a turnover and a profit, which perhaps isn't really there because they're perhaps not going to get paid. So coming back to the specific story here, we had the situation where OpenAI has received the promise of funding from Nvidia in exchange, potentially, for the continued use of Nvidia's hardware. So Nvidia is potentially selling hardware to OpenAI and giving OpenAI the money in the form of an investment in OpenAI, so it's got the money to buy that hardware from Nvidia in the first place. And that's all well and good, but so far, let's just say that OpenAI is very focused on rapid expansion, and it's not yet operating at a sustained profit. Not uncommon for fast-growing technology companies. Many of these fast-growing companies prioritize scale, i.e., let's get lots of customers, and we'll worry about how to make a profit later. But of course, there's no guarantee ever that they will get transitioned to profit. But it's a model which has worked for some companies. I mean, it's one of Amazon, for example, for decades operated at a loss, but was going for scale. And of course, in Amazon's case, it did work. But you don't know for sure that it's going to work for every company. Anyway, that's where the debate's going, and that's perhaps why there are some worries about stock prices such as that we're seeing from Nvidia. And it wasn't just Nvidia's stock price. If we go to look at the index, the NASDAQ index, you can see it behaved in the same way. Let me just bring that up there. So there we have the NASDAQ index, and you can see there's where I put my cursor there. There's the leap up on Thursday on Nvidia'as results, which were so good, followed by that sudden decline there in the next day or two. And now we're having a bit of a rebound. Let's just have a quick look at the other world markets to see where we are. So the Dow Jones, you can see over the last, let's get rid of that. Dow Jones over the last week, you can see, let's make that year to date a bit more. It's coming off the high quite nicely if you're a bear. And the S&P 500 there came off the high just there, but it's rebounding a bit here. In Japan, the Nikkei index is coming off the high. In Europe, stocks index, well, they're all coming off the high here. I think that's the pattern. Let's look at the FTSE 100, which is here. Same sort of pattern. Now, coming up, while we're on the FTSE 100, coming up, we've got the UK budget tomorrow. That's Wednesday. So Rachel Reeves will deliver her autumn budget. And for those of you who want to listen, it'll be delivered at 12:30. That's an hour after midday, UK time tomorrow. So despite the Labour Party's manifesto that they won't increase taxes, it is now widely expected that taxes will be increased in this budget and that spending will be cut. Personally, I think she's got a near impossible job. I don't know how she's going to do it and how she's going to juggle the numbers, and it's not one that I would do myself. I don't have a solution. I think Britain's gone too far already. And it's impossible to say how the stock markets are going to react. Obviously, it could be stock markets, bond markets, or currency markets, or all of them. They could all react to the budget. Now, it's obviously one might say that's very insular, it's just in the UK, but the reaction could affect global markets too, and it could be violent in either direction. If she somehow gets the numbers absolutely perfect right, the market can celebrate. Gilt prices can rise. Those are the government bonds. Gilts are called other UK government bonds. They would rise, reducing the yield. The pound might go up, and the stock market might go flying upwards. But if she gets it wrong, the opposite could happen to all of these things. And of course, that would have a repercussion on global markets as well. So she's treading a very thin tightrope between keeping the markets happy and panicking them. So I think it's just an opportune time to go and look at the UK bonds here, just to see how the 10 and 30-year bond is doing. Let's start with the 10-year bond. So here you now see the UK 10-year bond, and going back to the start of the year, as you can see, there's not been a great deal of change. It's been up and down, but trading in a very narrow band, well below 5%, well above 4%, and very close to 4.5% throughout the entire period. The 10-year yield at the moment is 4.51%. It'll be interesting to see how it reacts after tomorrow's budget. Just going back a little bit further in time, we can sort of see what might go wrong if we go back to September 2022, October 2020, where we had the Liz Truss budget, and you can see that at that moment yields spiked up from where were we? Was it 2022? Was it 23? Yeah, it was. I think that was a Liz Truss moment where the yields spiked up to 4.24% very, very rapidly. Well, we're at a higher yield now, but of course, if the market doesn't like the budget, we might see another spike up from the present 4.51%. Looking at the 30-year yield, it's a lot higher. People are now, click on that, you can see the 30-year yield is about 5.34%. And I pointed out a danger zone there. I'll get rid of that because that's kind of an old story. but where 5.334 is a high yield for a government bond anywhere on the planet, and it kind of implies that people are losing confidence in the UK's long-term financial future. Now, that's not dissimilar to what's going on in France. So we look at the 30-year in France, and you can see the yield there is also climbing up, and similar reasons for it. France is also facing a budgetary crisis. Going to the currencies, let's look at the pound against the euro. You can see, going back, that's the long-term chart, it's been fairly even Stevens. But if we look at just this year, you can see that the pound has been trending downwards. And I don't know if that's about to stop, but that's been the direction of travel of the British pound against the euro. A little bit more of a mixed picture against the dollar. We had this period when the dollar was fairly weak at the start of the year. This is, we're looking at the chart of the current year. So at the start of the year, it was in January 1.22 against the dollar. That's £1 buys $1.22 roughly. And at its peak, we had a pound buying $1.37, and currently it buys $1.31. That's roughly where we are. So the pound at the moment and recently is declining against major currencies like the dollar, like the euro. I think that's the message. Will tomorrow's budget turn that around? Well, we'll see. It's obviously, we see a little tick up in the pound just today. Let's look at the Swiss franc. Here's the pound against the Swiss franc, obviously also in decline. And let's go back and look at all time and see how it's been doing since the beginning of time. I'll just get that to fit. So yes, you can see going back, I'll only go back to 1978, where it was, we got £1 would buy you 5 Swiss francs. Or can I go back further than that? There's something funny happened there. I don't think that's right. So go back to, about 1978, and we had, there we are, a pound buying 6 Swiss francs. And what's it buy now? Barely 1. It's buying you one franc and 6 rappen. A rappen is a Swiss cent. So there you go. You see the pound literally going down all the time. I think if I put that on a logarithmic scale, it might look a little bit better. There we are. That's a logarithmic scale. Pound's heading downwards against the Swiss franc. Or is it the Swiss franc is just the strongest currency in the world? I think that's really the reality. Unlike most countries, Switzerland has got far less debt versus GDP than everywhere else. So what else is coming up this week? So tomorrow we've got the budget of the UK. On Thursday we have what we will get the minutes of the last FOMC, the Federal Open Market Committee, or the Federal Reserve if you want. It's just the minutes, no decisions, but we'll see how the case was discussed, or the interest rate case was discussed, and what they were thinking about employment and inflation and all the other factors which guide them on their monetary policy. The next meeting of the Federal Reserve is scheduled for the 9th and 10th of December, in about 2 weeks' time, just under 2 weeks' time. So currently the stock markets are forecasting an 80% probability of a cut in interest rates. Let's have a look at what the CME FedWatch says. So let me bring that up. Let's get rid of that. So as you can see, probability of a cut to 3.75% from the current 4% is 80.9%. Probability that rates stay the same is 19.1%, or roughly 20%. So most people think there's going to be a cut at the moment, but that's very different from a week ago. If you look here a week ago, the chance of a cut was not 80% like we have now, it was only 50%. And a month ago, it was 91%. So huge swings we've seen in the expectation. Why is it swinging around so much? Well, we're in a data drought. With the US federal government shutdown, which has now ended, there was a period of over a month when there was literally no data. from anything, so we didn't know what was going to happen. And not only us, the Federal Reserve was also running blind on data. So, as an example of the kind of data we haven't had, we've had the job statistics, the labour statistics from the Bureau of Labour Statistics. They've cancelled the job report for the month of October, literally cancelled. We won't get that. The Consumer Price Index has been cancelled. Q3 GDP number is delayed. Retail sales for September and October are delayed, and the Producer Price Index is delayed. So, what data has the Federal Reserve got to rely on? Well, it's sort of second-hand evidence and not the official evidence. So we'll see how that affects its decision on December the 10th. But let's now turn our gaze to gold, which I think is proving to be very interesting at the moment. Here you see the spot chart. The headline's just popped up. It says gold pulls back from 1 week high ahead of delayed US data. Interesting. So this is a long-term chart. Well, not that long-term. It goes back a couple of years. Let's go back 5 years. So if you look at the 5-year chart, you can see it's been accelerating to the upside. And the reason for that is central bank buying. More and more central banks are saying, to what extent do we want to totally rely on dollars for our reserves? And they're starting to look at other things. And the obvious other thing to look at is gold. So we've seen over the last few years quite strong central bank buying. There are other factors going on which you can look at. We'll talk about another day. But what I'd like to look at is the much shorter trend here because I see a pattern forming. Now, I'm not much of a fan of seeing the future in graphs, but there's one pattern I do actually like, and it's called the flagpole pattern. And I see that forming here. So if I try and draw that for you, let's go here. I'll get that. There we are. So a flagpole pattern is where you have the flagpole up. Let's draw that. There's the flag going up. And then you have like a football flag, the triangle like that. And then you have another part of the flag, which is like this, going up to complete the triangle. And the theory is where the point of the triangle meets is the point at which you have to have the breakout, which can go in either direction, up or down. So as you can see, we're getting close to the point of where it could change. And that point would come probably about there, early December, 3rd, 4th December. So if we get a breakout to the downside, then we can expect gold to go back to the 3,700, 3,500 level and stay there for a while. If we get a breakout to the upside, it probably means we're going to go above this all-time high of 4,400 and something. Now, what do I think is going to happen? Now, this is not investment advice, it's just my personal opinion. I think that as we go into 2026, first of all, the central bank buying of gold is not going to go away. I think it's more likely to accelerate. But more importantly, and a much bigger factor, is private investing in gold. And I think what that will depend on to what extent banks and investment managers decide to put gold in their asset allocation for 2026. Personally, I think that's rather likely because mathematically, if you add gold to a portfolio, or the maths will show that, it will show that it's increased the returns and reduced the volatility over the last few years. So I think that it's quite likely that gold will find its way into portfolios starting from next year. It's not much in portfolios yet, it's less than 1%, I think. And if that happens, that should theoretically drive the price higher. Now, I did promise you a story about how I got involved in money laundering. I'm not doing it myself. I've never been a money launderer or anything like that. Now, I've worked in Switzerland for 40 odd years. I worked in wealth management and private banking. And I know that many people believe, and still do, believed, and some still do believe, that Swiss banking is a haven for secrecy, for money laundering, for tax evasion, for criminal money in general. All I can say is I can't really comment on how true that is in general, except that to say I have always been working in very reputable banks, and personally, I've never seen it, except on this one occasion I'm going to tell you about. So I'm not trying to say that there's no money laundering going on in the world. I mean, the reality is there's hardly even a single bank in the world which hasn't faced accusations that in some way, shape or form, it's either been involved in money laundering or allowed it to happen by their customers. And that's usually the real allegation. And in some cases, those banks have been found guilty of participating in those crimes. But what I'm saying is, at a personal level, I can't think of a single case of money laundering that I've ever seen, except perhaps this one I'm going to tell you about. So this story goes back about 43 years ago. Yes, only once in 43 years have I got a story about money laundering, but I'm going to tell it anyway. So I was working 43 years ago in Grand Cayman in the West Indies. Grand Cayman is part of the Cayman Islands. It's a very small island, but at the time, and probably still today, there were more companies registered there than there are people on the island. And it also had a smattering of banks, many of which had a real presence and many of which had just a virtual presence with a nameplate on a door. But I was working for a very large bank, probably the largest bank in the Cayman Islands at the time. And back in those days, we didn't receive that many visitors. I mean, literally not foreign visitors from overseas. Because there weren't many flights going in and out of Cayman. There was one flight a day from Cayman to Miami and one flight a day from Cayman to Kingston, Jamaica, and back again. And sometimes it was one direction one day and the next flight was the next day. So very little international traffic across the border there. And most of the flights going to Miami were filled with Caymanians who were going shopping in Miami because you couldn't buy much in Cayman. I mean, if you wanted to buy clothes, electrical equipment, or food, such as fresh meat, going to Miami was a good option. You couldn't buy fresh meat, for example, in Cayman. All that was on offer in those days was frozen meat, and that obviously isn't to everybody's liking. And then the other direction where planes flew every other day, or maybe 2 or 3 times a week, was to Kingston in Jamaica. Now, those flights were filled with a different type of customer. They were filled with Jamaican ladies who were buying washing powder in the Cayman Islands and flying it to Jamaica to sell. And the reason they would fly it to Jamaica to sell was because Jamaica had some sort of exchange controls and you couldn't get washing powder in Jamaica. So washing powder, which should be bought in the supermarkets in the Cayman Islands, could be sold at a big premium in Jamaica. And when they flew back, they would come back with huge bags full of mangoes because, for whatever reason, mangoes were hard to come by in Cayman, or at least fresh mangoes. So they'd fly back with these huge pink and blue bags, the big giant bags full of mangoes, and it was awful in the plane because the plane would be buzzing with these little black fruit flies, and sometimes you'd have the juice dripping out of the overhead holds. I don't know why they allowed it, but this was obviously not a Western plane. This was a plane owned by perhaps Jamaican Airways or something. But anyway, that's not relevant to my story about money laundering. So the point I'm making is, when I was working in the bank, the one thing I'd never expected was foreign visitors. Perhaps we'd see one foreign visitor a year maximum. I mean, of course, there were cruise ships coming into the harbour in Georgetown, Grand Cayman, and sometimes the people on the cruise ship would say, when you get to Grand Cayman, go and visit a bank and open a bank account because you could have tax-free bank accounts in the Cayman Islands. Obviously, not a lot of people came to the front door, and if they did, they would be wearing shorts and a T-shirt, not dressed for visiting a bank. And luckily, we had a pretty good doorman who would suss out the visitors before they got through the door. And as a general rule, the people who thought it was a good idea weren't rich enough to qualify for a Cayman Islands bank account. And even if they were generally told to do it by correspondence. This is not the way you do it. So they generally went away empty-handed if they came out off the cruise ships. But one of my very, very rare visits, it was a lady. She came into the bank and she asked to see me because I was in charge of a particular account. And she came to me and she's... so this was, by the way, a fairly empty account. And I didn't know the owner. I never met him, actually. The account was open before I got to the bank. Anyway, she came into the meeting room and she informed me that she wanted to pay some money into that particular account. And I knew the account didn't belong to her because it belonged to a man. So I asked her why she wanted to pay money into someone else's account. And she said, well, it's my boyfriend's account. And her boyfriend had sent her to deposit some money. And I asked her, oh, really? You've come a long way to deposit money by aeroplane. Why didn't your boyfriend just wire it or deposit it in the bank in America, and it could come across automatically? It's a lot of money to buy a plane ticket. And she said that that's what her boyfriend wanted to do. He wanted her to deposit it in cash. And I said, well, okay, how much cash have you got? Where does it come from? And she said, well, he sold his apartment or condominium, she called it a condominium, in Tampa, Florida, and she's got $500,000 US dollars of cash. So I found that rather weird that someone would come in with cash, because I've never seen cash before in my life, at least not in those sort of quantities. And she'd opened up a bag and showed me this huge pile of dollars, not new ones, by the way. They were used dollars, all wrapped up in little paper things which said, I don't know, $1,000 or whatever it said on each wrapper. And I didn't know what to do. I was a young man, pretty inexperienced. So I immediately went to see the bank manager. He was a wily Scotsman and this kind of guy who knows what he's doing. And I explained the situation to him, and he said, tell her we don't take more than $5,000 of cash a day, not from anybody. Tell her we won't take her money. And then, kind of as an afterthought, he said, and this is probably what the thinking was behind his decision, I'm not mad enough to send $500,000 of cash back to the Federal Reserve all wrapped up in our bank's rubber bands. We just don't do that sort of thing. So obviously a bit of a worry as to what the Federal Reserve might say if they saw a bunch of dollars coming back from a Cayman Islands bank, which rarely transferred more than $10,000 each way. So anyway, I went back into the meeting room to see this lady, this girlfriend of the account owner, and I rather sheepishly told the poor girl that we're really sorry, but we can't take the money as it's limited to $5,000 a day. And she's got much too much. So she said, oh, well, I don't know what to do. And I said, well, why don't you go and talk to your boyfriend and find out? But we can't take it. And so she left the bank with all the money. And I don't know what happened to the money after that, at least for the time being anyway. But that wasn't the end of the story, because about 1 month later, another young lady arrived, also wanting to deposit money into the same account. Now, this wasn't the same girl as previously, so I'm wondering if he's got two girlfriends or what. But when I questioned her as to who she was and why she wanted to deposit in somebody else's account, she said that she was a paralegal working for an attorney in Tampa, Florida. And her boss, the attorney, had sent her out to deposit money on behalf of Mr. So-and-so, the account owner. So I was kind of getting used to this, so I said, I don't know how much you've got, but we only take $5,000 a day. And she responded that, yes, she said, I want to deposit $5,000. And I said, well, why did you travel by aeroplane so far just to deposit $5,000 when the guy who owns the account could have just deposited it in America and wired it to us? So she then responded like this. She said, well, my boss said that after I'd deposited the first 5,000, I've got to deposit another one, and so on. So I said, how many 5,000s do you have? She said, I've got $500,000. And I said, didn't they tell you it's $5,000 a day? And she said, well, he said I could stay as long as it takes to deposit all the money. And I said, did he really say you could stay 100 days? And she didn't know the answer to that. But so once again, I went to see my boss and asked him, what do we do? And so my boss asked me to call the company owner in America and ask him where the money comes from. Of course, I already knew the answer to that because the first girlfriend had told me that he had sold his apartment or his condominium in Florida. But since my boss had asked me to do this, I called the company owner on his landline. We didn't have mobile phones in those days. That was the first time I'd ever spoken to him. And when I asked him the question about where the money came from, he replied that he had sold his yacht for $500,000. So we didn't know, back then, we didn't know the word, we'd never even heard the word money laundering. That's a fairly new word from the last 20 or 30 years. It wasn't 45 years ago, we didn't know the word money laundering. But it was pretty obvious that when I get two stories, one saying he's sold his condominium and the other one saying he's sold his yacht, somehow one of those two stories is not true, and probably neither are true, and the money's come from an illicit source, because nobody I know ever pays such large amounts of money in cash unless there's something to hide. So I immediately went back to my boss again, and my boss said, look, we're not taking any of that money. Tell the girl to leave the bank and take the money with her and close the account immediately. So she left the bank, and I looked out of the window and looked down as she walked down the road, and last I ever saw of her, she went into a bank across the road. Now, I'm not going to name that bank because I don't want to embarrass them, and I don't know what happened. I don't know if they took the money or not. But what I can say, somewhat later in the day, and Georgetown is a very small village, if you like, I saw the same girl walking around the town with the same bag, but the bag was visibly empty. So she'd found somewhere to get rid of her money, but I don't know which bank it finally went into. I know the girl was a little bit distressed when she left my office, but she obviously had solved the problem somehow. Now, of course, I closed the account as instructed by my boss, and my boss told me to say nothing in the letter. So the letter was sent to the account owner. It was short and blunt and had no explanation. It simply read something like this: Dear sir, your account has been closed. Please find enclosed a check for the balance. And that, as far as I'm concerned, was the end of the situation. Whether there was any subsequent investigation or anything like that, I have no knowledge, because after 3 years in the Cayman Islands, I left and came to Switzerland, where I am now. And I've been in Switzerland now 40 odd years. It's still always in wealth management. Anyway, that's my story about money laundering. If you like those kinds of stories, if you like having the daily news about what's going on in the stock market, please don't hesitate to like and subscribe. Thank you very much, everybody, and have a great day. Speak to you soon.